I'm Ashton Addison from Blockwest Capital for Investment Pitch Media. And today on the Crypto Coin Show, we have Colton Conley, founder and CEO of Prime Protocol. Colton, welcome to the show, and thank you for taking the time today.
Thanks for having me, Ashton. Thanks for having me, Ashton. It's good to be here.
You're very welcome. Excited to dive into Prime, a little bit on DeFi, bridging crypto assets, and your insights into the industry. I would love to start off our conversation with a little bit on yourself, your background in blockchain, and how that led to Prime Protocol, and then we'll dive into all the details.
Sounds good. So some background on myself. I got started in crypto originally just as a retail trader. I was working in TradFi, doing interest rate volatility trading at Citadel, and I was spending basically all of my free time doing DeFi. I was managing a ton of different positions on different blockchains, and I thought there was a real need for something that basically bridged the gap between all these different chains and ecosystems. And the fact that I had to partition my portfolio into a ton of different chunks in order to be able to take out leverage positions in different places. And I was really frustrated with the bridging infrastructure that existed. And I wanted something that was more similar to the TradFi experience, where if you go to a prime broker, the prime broker is just going to look at all of your positions. It's going to aggregate them all together and then give you margin or allow you to take out leverage based on everything in aggregate. And so that was kind of the genesis for the idea behind Prime, was I wanted to bring something closer to that TradFi experience to DeFi. And so I decided to start the company, and here we are. Now we're on mainnet, we're on a bunch of different chains, we're launching more soon, and it's been a great ride.
Wow, that's great. It's a true entrepreneurial journey. You had the problem yourself, so there's no solution, set out to fix it.
Yeah, exactly.
Very cool. And maybe you can give a high-level overview of, I think you did a great explanation there of like comparing it to how people are used to in TradFi, but a lot of the viewers, they've done a little bit of single coin staking of their Ether, or they might have been trading on DEXs, but not are all super familiar with the borrowing and lending on DeFi and liquidity provision and things like that. If they were to try and get started with Prime Protocol, could you explain exactly what they are capable of doing in their first steps?
Sure. So the first step is you just need to deposit some tokens. You can do that on any of the chains that we support. Right now we're live on Ethereum, Polygon, BNB, Moonbeam, Arbitrum, Avalanche, and Optimism. And a little bit of alpha for the viewers. Base is coming very soon. So we're constantly trying to expand to new ecosystems that we think people will find useful. And so maybe in your example, you've got some people who are holding like a liquid staking token, like Lido staked ETH. And maybe you've got that wrapped staked ETH that you're holding on Optimism. And what you want to do is get into a Trader Joe pool that's yielding like 100% on Avalanche. And yes, they still exist. What you can do is you can deposit that wrapped staked ETH on Optimism. Then without having to bridge anything, without having to swap anything, you can get immediate access to that liquidity on Avalanche. So you can borrow the Bitcoin, you can borrow the USDC on Avalanche, go deposit that into the Trader Joe pool to start yield farming. You're still earning all the yield on that Lido staked ETH that you deposited on another chain. That's acting as all of the collateral for those borrow positions that you took out. And you didn't have to send any tokens to another chain. You could even borrow the gas tokens on Avalanche from us or another chain if you don't have them yet, because we allow you to initiate borrows from different chains. So even if you're totally new to an ecosystem, Prime gives you an alternate way to bridging to get value on a chain where you see an exciting opportunity, but maybe you don't want to have to trust a sketchy bridge to get there. You don't want to be holding a ton of wrapped assets. Maybe you don't want to pay the bridging fees or the swapping fees. Prime allows you to get around all of that. So the flow of using the app is you deposit, then you borrow, and then profit. So it's very simple.
Hopefully. That's awesome. And that's a great alternative, thinking outside the box. It's like, if there are security risks or some risks or even just tedious, takes time and it's annoying to go through this bridging process of moving crypto to other blockchains. It's like a workaround where it's like, hey, you don't really have to bridge the assets, which I think is great. And you have firsthand experience of how annoying it is to try and move assets into different blockchains, especially when you're looking for high returns in DeFi, and sometimes you have to move back and forth between different chains, or as you mentioned, Base comes out and all of a sudden there's new activity on there, but then it might go back to a different chain and you have to go back and forth. Can you talk about your experience with the bridging? And I think there's a lot of people that are afraid to move their assets off of Ethereum or often because they just don't understand what are the risks that they could be taking, and is it actually worth it to try and move them all back and forth?
I mean, in the case of a lot of bridges, the answer to that has been no, it's not worth the risk. And one of the bridges that I had the worst experience with was Multichain. This was not before it got compromised. This was actually back when everybody was trying to bridge over to Phantom because there were some really high yield opportunities there. And there was no liquidity on the bridge. And that meant that you could get stuck on the bridge for like a week. I had like a good chunk of money that was stuck on that bridge for a while. And I was like, never again. I'm not doing this again. That was too stressful. And it was like an anonymous team. And that was back like when, everybody was playing with their profits. So I was okay taking the risk. But after that experience, I was like, guys, this is too sketchy. And I looked into it more, and it was an anonymous team based out of like somewhere in China. Like people were just YOLOing into it, but they had never looked at the contracts. They didn't know what kind of permissions the admins had. And I was like, wow, this is really scary that there's like this much value on there. Like I had at first assumed like maybe other people are doing due diligence, but no, there was none. And obviously like, as soon as those private keys got compromised, people lost billions of dollars. And there are some other bridges where they were hacked, and maybe like people don't know this as much. I don't want to call out like individual projects, but there were some teams that were basically like, we don't need to do audits. Like we're better than the auditors, so why would we waste money on them? And then people are like, no, you have to get an audit or we're not going to integrate with you. So they're like, fine, we'll get like one audit done. And then bridge gets hacked. And it was a dumb, like really simple mistake that just got overlooked. And so I think like the security practices for a lot of these bridges, it's not the same. It's not apples to apples. Some we think are much more secure than others. So like one that we have been using for general message passing is Axelar. And we really think that team is exceptional. Their security practices are very strong. It's a very decentralized solution. You're not putting any trust assumptions on the relayers. And so I think that bridging can be safe if it's done the right way. And so we're making sure that everything that's integrated into Prime, we've already done all that research for you for our message passing. And we're not even like bridging tokens when we move data from one chain to another, which means we're not exposed to as much of the token bridge risk, which is usually where the exploit happens. So there's a lot of risk mitigation stuff that we've done as well, even around the bridge, to make sure that like if your message gets stuck, we're able to resend it for you. We've cached it on both ends to both prevent replay attacks, but also make sure that if something did go wrong, we can resend it over a different message passer in the future if we needed to. So we have a lot of like risk mitigation practices in place to make sure that it's as safe as possible. So that's what I would say to people is, if you're going to use bridges, you need to do your research or find somebody who's like already done the research and rely on that, because not all of these solutions are created equal.
Yeah, no, that's great insights into the bridges and the past experience, and nice message there about Axelar. We have had them on the show, and it seems like it's a pretty solid solution so far. Bridges they're not perfect, but I think we're moving towards something that's getting better and better and more safer and a more seamless user experience, that at least people are not that they have to go through as much of a process to bridge their assets. And I think it's great for what it is right now, but I feel like we're moving towards some kind of atomic swap, cross-chain compatibility. What we're seeing with Cosmos ecosystem with the IBC inter-blockchain communication. Do you think that's something that's viable in the near-term future? And would that wipe out bridges, or they would transform into something that's more immediately cross-chain asset available?
So I don't think bridges are going to necessarily get wiped out by that. And the reason why is you're still going to have the EVM ecosystem where you have ETH and the ETH L2s, and then you're going to have separate ecosystems with Cosmos and Polkadot. And those you do need a bridge to connect them somehow, and you can't use IBC. Maybe they'll try, like I know they're trying to work on it, but that's basically what Axelar is an IBC fork that's connecting the EVM ecosystem and the Cosmos ecosystem. And so I think we already have some of the solutions in protocols like Axelar to connect these disparate ecosystems that aren't like natively connected. I think that obviously IBC is a fantastic solution. I think Polkadot's XCM is also a fantastic solution for moving assets between different parachains or different zones if you're in Cosmos land. But I do think there will still be a need for bridges to connect these different ecosystems, because I don't think people want to just be constrained to Cosmos or the Ethereum ecosystem. It does take a really long time as well if you're operating in Ethereum land and trying to use the native bridge to go to an L2. You have to wait quite a while, and I don't think people want to be waiting for days to go over the native Arbitrum bridge. They'd like to just zap their funds in. And I think there are safe ways to do that with decentralized message passers. And so I do think there will still continue to be a need for bridges in the future.
Great insights, Colton. And you being more of a DeFi insider, you're always on the lookout, especially running Prime, about good returns and what's sort of available in the DeFi world. There was a lot of recent articles that just came out. I was asked to give my opinion on why DeFi total value locked is very low right now. And of course, it seemed a little bit unsustainable in November 2021 when all of the assets were going through the roof. The APYs were also very high. What's your perspective on the strength of DeFi currently as it sits with Bitcoin and Ethereum sort of in a sideways market, and crypto Twitter sort of like a ghost land? No one's really talking, which is usually a good thing, a good time to be paying attention.
Yeah,
what do you think?
I think it's a good time to buy. I'm obviously biased, or I wouldn't be doing this if I didn't think so. I think that goes for most of us. But I think when you talk about it being unsustainable in 2021, the reason why it was unsustainable is everybody built their token models around the assumption that new money was going to keep coming in. So you were able to sustain emissions off of the new money that was coming in to buy your token. So that even though you were giving out tokens and those tokens were presumably being dumped from all the farming that was going on, you still had enough new money coming into crypto that everything was still going up. And then there's sort of this virtuous cycle of then the token value goes up, your emissions are worth more, everybody looks like they're getting rich on paper, and you have enough new influx of capital because of where we were at in the cycle and monetary policy and a lot of things that were a really great confluence of events to send everything to the moon. Obviously, that's not going to last forever, because there's no way to constantly have new money come in a monetary policy system that gets flipped on its head and we go from zero rates to over 5% relatively quickly. And that happens globally, not just in the US. And because of that regime change that happened everywhere, we obviously saw the effects of that in crypto. The flywheel stopped working. And as token valuations fell, then the APYs were not as high, even if you were emitting the same number of tokens. And I think the way that we get ourselves out of that, obviously macro is a factor. As money gets cheaper, then a lot of those same mechanisms that drove the last bull run will drive the next one. But there's also, I think, a really encouraging trend of people finding more sustainable sources of yield. And rather than bringing new money into the ecosystem by having new retail investors buy tokens, we're starting to bring new money into the ecosystem by having real yielding assets be included in DeFi. So there's now firms that are working on tokenizing treasuries, which I'm sure you've covered before, like there's Maple, there's Ondo, Fidelity put money markets on chain. Franklin Templeton is putting money markets on chain. Like there's a lot of really promising developments here. And those sources of yield, you don't need to be diluting your governance token in order to offer those to people. And like that's being funded by the US government, which is a pretty reliable source of funding. And so, and then you add on top of that, in the future, I think you're going to have like more corporates and real estate things on chain as well. I think it's only going to expand. And so I think that's really bullish for DeFi because DeFi has basically, in the last bull run, we built a ton of primitives that gave us the rails to support these more like actual real and tangible financial use cases. And I think that's what everybody's really excited about. The other thing is, I think the low DeFi TVL, people look at that and they're like, oh, that's terrible, like DeFi is collapsing. But DeFi has actually become a lot more efficient. Like back when everybody was using the standard AMM model, you're spreading your liquidity evenly across a ton of different prices, many of which will never be hit. And that liquidity is just sitting there idly and it's not being productive. Now with things like UniV3, we're moving closer to an order book model, which is what traditional finance converged upon for a reason. It's much more capital efficient. And so you're able to handle much higher trading volumes. You're still able to handle liquidations in large size because everybody's taking their capital and concentrating it around current market prices. And so the lower DeFi TVL is actually still handling really high trading volume. If you look at trading volume on decentralized exchanges versus centralized ones, the decentralized exchange trading volume isn't necessarily like going away. Like it's still there. And I think it's only going to increase. And part of that is due to innovations in the order book trading model and concentrated liquidity models of the newer AMMs and the UniV3 forks. And so I think that's also a really positive development for DeFi, is basically allowing you to just use the capital that's in the system more efficiently. And then the last that I would point out is obviously perps have gotten a lot of traction as well. And that's just another example of people being able to use their capital more efficiently. You're able to under collateralize to take out a trading position. I mean, perps is something that we're actually working on now. And we're going to add that to our product suite because we want to offer everything, all the financial tools we can in a cross-chain way. And that seems like a logical next product in our line of offerings. So I think there's a lot of really exciting things happening in DeFi. I think the low TVL isn't necessarily what you should focus on. I think you can see trading volume and revenue and fees are not doing as badly if you were just looking at the TVL chart. And there's a lot of new sources of yield that are going to drive the ecosystem even more than just easier monetary policy would.
Wow, great insights and a great perspective about the advancements in decentralized exchanges. I spoke to many CEOs of crypto exchanges this week, and my question was, what do you see the balance of centralized exchanges where we're at and decentralized exchanges, and are more people going to move to DEXs, and what are the reasons? And I think you articulated it quite well about the advancements in Uniswap and just making it more efficient. I feel like having more functionality as well. Uniswap sorted out as like one button inefficiently, just like buy or sell, and hopefully it continues to grow, and not just with one decentralized exchange, but sort of the industry as a whole finds ways to bring more functionality, more efficiency of the markets. I feel like you also mentioned that. Is there any other catalysts that you think will be a major player in making more people start trading on decentralized exchanges?
I think people are going to go where it's most accessible to them. And so getting more people just on chain in the first place, I think will be a big catalyst, because once you have your money like in a MetaMask or in a wallet that's on chain, moving it back into a centralized exchange is just a headache. And I've noticed this for myself is the more money I have on chain, the more I'm using decentralized exchanges rather than centralized ones. The other thing I think will be fees have to come down for a lot of decentralized exchanges, and making the liquidity more concentrated is enabling that. Because before, it made no sense to put your money in AMM unless you were earning token incentives and the fees were high. I think going forward, people are realizing if I make an AMM with concentrated liquidity and slightly lower fees, I'm going to get larger market share. And that's still going to benefit my LPs because they're going to do more volume. And so I think as fees come down as well, once that is a bit more close to what we're seeing in centralized exchanges, that'll be a catalyst in addition. Because then people will be looking at what's my actual price execution, and that's what the larger players are looking at. And as that gets better and better in DeFi, it's just going to be a virtuous cycle of more volume comes into DeFi. We don't need the fees to be as high for it to be sustainable to put your capital in. You're going to have more people market making in DeFi, and it's I think just going to improve the whole system, and that will definitely be a catalyst. So I think we're already moving in that direction.
I agree. What's the point of sending it over to the centralized exchange and waiting for the confirmations if there's a 1 or 2 click solution on the DEX when your money's already on chain? If that user experience can become a little bit more efficient, a little bit better, I could easily see that sort of flipping it on its head.
Yep. And I would say the last thing is just around trust. Nobody trusts the centralized exchanges anymore. The centralized exchanges can freeze your funds. They can take them arbitrarily. They can do what FTX did and just gamble them, and there's nothing backing it. I think the smart contract risk that we have now in decentralized exchanges is way lower than the risk of a bad actor gambling your funds in a centralized exchange. I mean, there have even been questions recently about how solvent Binance is. And I hope to God that Binance is solvent, and I think they are right now, but there's no way to actually know. And because regulatory bodies have decided to not cooperate and work with centralized exchanges and just be adversarial, there is no incentive for them to actually try and comply with regulations that demonstrate solvency. And the only exchange that I really completely trust right now is Coinbase. And they're being put through the ringer by the US government by trying to be a good actor. And all the other ones are why would I even bother? Look at how they're being treated. And so I think if you're looking for just your counterparty risk that you're taking, putting large amounts of crypto in one place, it's better to have it in a wallet that you have the keys to, that you own, rather than trusting it with some third party.
Great perspective, Colton. And you mentioned earlier about introducing perps into Prime Protocol. I'd love to hear what else is in the plan for the roadmap in growing Prime and growing the DeFi sector.
Well, like I mentioned, we're looking at introducing perps. It'll start on a small number of chains, and then if it gets traction, we'll expand it to more chains. It will be cross-margined, your deposits into the perps side of the protocol across all the different chains that we offer, true to the spirit of Prime. And the other things that we're working on, there's obviously new chains coming out. I mentioned Base earlier. We're looking at a few other ones as well that we're going to be launching and adding to the ecosystem. We're also looking at adding new LSTs and interest-bearing tokens. So we've already added Rocket Pool ETH, Lido ETH, and Coinbase ETH. But I think one thing that we've noticed is we're sort of competing with Aave for a lot of that looping volume. And because we are smaller, you can't put as much volume through us than you could through Aave. But there are a lot of smaller LSTs that have really strong communities, have great yields, and other incentives for using them that aren't supported by larger lending protocols. But we still think they're exceptional products and very safe. And we're planning to add those to the protocol as well. So you'll have more options for different LSTs that you can loop. We think the yields will be better with us. And there's also some, like I mentioned, the on-chain treasuries. There are some tokens, C tokens, that we can take that are basically deriving yield from those. And I think that'll be really exciting as well, offer people other sources of yield and ways to lever up their portfolio.
Very exciting. And what is the best way for people to follow along with those updates and also just try out the platform right now?
Well, definitely follow us on Twitter. Our Twitter handle for the company is prime_protocol. My Twitter is Colton F. Conley. We both tweet a lot about what's going on with Prime, and so we'll keep you updated. And you should also check out app.primeprotocol.xyz. That's our official app website. Make sure you check the URL that it's correct. That's app.primeprotocol.xyz. That's how you go to deposit, borrow, do whatever you want. And you can check out, also, we have a points system running right now to track early usage of the protocol. And we have a leaderboard. We also have a referral system. So even if you don't have a ton of capital, you can still earn points by referring people. And that's all tracked and recorded. And you can see how you're doing. And it'll be useful for us to know who contributed to the protocol early on in mainnet.
Very smart. I love to hear that. And I will leave those links to the socials and the platform in the notes below. Appreciate your insights greatly on DeFi and where it's at, Colton. Thank you so much for the time today, and let's definitely follow up in the near future.
Awesome. Thank you so much for having me, Ashton. This was great.